Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for the post-election date of November 9th, 2016. That's a Wednesday. This is a market preview for what comes tomorrow. Although, as I record this, we haven't even had any of the polls closed yet, so we don't have any knowledge yet for sure of who's president of the United States. Obviously, it looks like Clinton's ahead in the polling, but we'll see how that actually plays out. And then ultimately, we still have the Senate and the House to look at. My guess would be the Senate's roughly a 50-50 tie, and the House stays in the Republican hands. And Clinton's president, that would be, I think, liked by the market, generally speaking. Having said that, can you get a buy the rumor, sell the news type of thing where the market's held up all this time kind of with those expectations, and now that it happens, would they sell it off a bit? Maybe. Or maybe they really like it. I'm hoping more than anything that we get volatility and volume back in the market now that this election is over. I don't know that the presidency has been the big question mark, but obviously the Senate has been, and maybe just having some resolution to that will finally get things moving a bit. But as you can see, here's the ES front month futures contract. It's the daily chart of the broad market in futures form as it's meant to be seen, and nothing new to say. We're still right where we've been for the last few months. This is almost exactly where we were on 4th of July weekend or right after it, so we're now going on month 5 without going almost anywhere. Basically, the range during this whole window has been less than 100 points on the S&P. That's a long time to sit there. Let's go through the major indices. We'll take a look at the intraday action so you can see what happened on Tuesday, and then go from there. So we've got the crude oil down 20 cents to 44.70. Got gold down $2.90. By the way, it's always interesting when you're wrapping up a presidency like this to take a look at some of the things that have gone on. So let's take a look at the monthly chart of some of these things just so we recognize where we've come. So this is crude oil, and it takes you back to, obviously in the mid-2000s when oil was on the rise consistently, and there was always that $80 threshold they talked about. And if crude ever got above $80 a barrel, that was going to be a real problem for the world economy. And of course, that happened at 2007 at a time where structurally the U.S. had some issues that hadn't been exposed yet in the real estate market. But I think crude oil running up to those levels put a kibosh on the global economy, and that exposed the real estate issues. And that's really what led to the collapse in 2008. And then, of course, crude oil comes crashing back down as the economies of the world all slow down. Nobody had demand for using oil, and everything gets back to the point where crude oil actually hit like $40 a barrel. And that's about the time when Obama came into office. And so you can say that from that point, crude maybe stabilized back in that 70-80 range. It did get back above 100 for a while. And just with the increase in U.S. oil production and some of the increase in the use of solar and other sources of energy, we finally got a drop off in oil back in 2014-15. U.S. now producing more oil than it ever has. So, that puts us back here about where it was when Obama came into office. Let's take a look at gold in the same way. Gold's been up steadily for the last 2 decades. Obviously, it's pulled back a bit since the high in 2010, and it's still up a little bit from where it was when Obama, as I said, came into office. Here, look at the S&P 500. This is the broad market. So here's the, you can see the first decline that occurred back from 2000 on after Bush became president, and the 3-year decline that we had there leading up until we invaded Iraq. Literally, that was the turning point in the market. 2003 was very slow until that happened. And then the steady climb back up until we hit that point in 2007 where crude oil got over 80, and that was the top of the S&P. And then, of course, as everything unraveled, the big collapse in 2008, the fastest collapse of wealth in the history of the country right there. Obama comes into office literally at the low candle there on the monthly chart, and you can see the run and the hold we've been on ever since. So anybody that tries to make the argument that the economy is worse off now, I think that's a tough argument to make. Here's the NASDAQ side, about the same, except for obviously a bigger rise. The sell-off in 2008 doesn't look as pronounced there as it does. So those are just some of the monthly charts to look at, just so you put in context what the market's done. And this is where we're going to be sitting when the next president, whichever one it is after today, takes office. All right, so the NASDAQ 100 gained 31 points to 48.04 on Tuesday. Stocks was up 1. Biotechs were up 6, that's just a blip on biotechs. The VIX closed at 1874. That's up 3 cents. Not a big deal. On the VIX, it's down from where it was 2 days ago. Now the trend, this is what's interesting. I've been pointing this out. If we got low readings 2 days in a row, it's not super low. It's a 0.98 number we got on Tuesday here on the trend for the close. But remember, we had that really low number on Monday. What this does is it puts the 10-day moving average at 0.86. Remember that when the 10-day moving average is 0.85 or lower, that is generally a sell signal on the market. So if we count backwards the 10 dots, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, the only thing is that 10 days ago, so the number that's going to drop off tomorrow is a reading of, it looks like around 0.7. So the new number tomorrow has to be lower than 0.7 to bring that moving average down anymore. I don't know if that's going to happen. We may just barely avert a trend sell signal on the broad market, but we shall see. NASDAQ volume was 1.5 billion shares. Obviously, people out voting and whatnot. Not uncommon for election day to be light. Don't forget, we still have Friday ahead this week, which is Veterans Day. Banks are closed. Almost shouldn't even be here for the stock market unless there's some sort of surprises here in the election that create some rampant volatility. Most people will be taking Friday off. Advanced decline ratio on the NASDAQ plus 287. Advanced decline ratio on the New York plus 412. Google gains 10 bucks, heading back towards the highs here. Apple gains 65 cents. That's about middling for where it's been lately. Amazon up 282. Netflix down 24 cents, but still holding up near highs. Tesla's up $1.73. Okay, so that's what we've got overall to look at in the markets. Now let's take a look at the 5-minute chart of the ES, just so you can see we had a small gap down here on Tuesday in the first hour, which is dead flat, absolutely nothing going on. Barely bought over 300 million shares on the NASDAQ after an hour. It was just horrible. And then started to rise, filled the gap, went a little higher heading into lunch, and then topped out exactly with, look at that, the 13 Comer sell signal, nails the high of the day on the ES. We had a nice short after that on the futures that we called and made some money on, and then that was it. Just kind of sideways slather into the close. NASDAQ side doesn't look much different. All right, so is volume immediately going to come back tomorrow? Hard to say. Obviously, contested election could cause some problems for the market either way. If we have some uncertainty left over the Senate races or any of that type of stuff, obviously we just want to get to the point where we know what's up and move forward as a country and certainly as a market and as an economy. Charts as usual brought to you by eSignal 12. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading Wednesday and good luck in your voting.